Happy Friday. Brian Manning here with the weekly update. Let's get right to it. Monday this week, we got new home sales. This is signed contracts for the month of October. This was down 5.6% on a month over month basis. I was not surprised to see this number at all. If you look back at October, interest rates were pushing 8%. Not shocking to see there was less contracts signed in. We've seen rates move lower since then. So we'll probably see better numbers moving forward, but that wasn't shocking to see. We also got some home appreciation info. Despite all the negative media out there, we got feedback from Case-Shiller and FHFA. This is for the month of September. This showed across the country that homes had increased in value by 0.7%. That's at Case-Shiller. So Case-Shiller looks at all transactions, purchases, jumbo, FHA, conventional, every type of transaction. Then we get feedback from the FHFA. FHA looks at closed transactions that only had conventional mortgages attached to them. This is also for the month of September, and home values went up 0.6% then. So really good to still see resiliency in the housing market here. We also got some feedback from apartment lists who've been watching this, because if you've watched any of these videos in the past, you know that we're looking at the shelter costs as far as inflation is concerned, and rents are a really big component of this. So this is showing that rents were down 0.9% on a month over month basis, and on a year over year basis. This moved rents from going up at 1.2% to 1.1%. So seeing the rental market there is good, because it makes up like 43% of the shelter component in the CPI and the PCE report. So it's just going to show us that we're going to have a continued easing of inflation there. Then we also had Fed Governor Chris Waller talking. Chris Waller's probably been one of the most hawkish people out there as far as interest rates are concerned. He says becoming increasingly confident that the decline in inflation will continue, and that there could potentially be a lowering of interest rates in the next 3 to 5 months. So the markets right now are betting that you're going to see a reduction in the Fed rates anywhere from March to June. I think when you get to June, it's almost like 100% bet right now you're going to see a decline of rates. So definitely positive information looking forward. We're really excited to see what's going to happen there. Wednesday this week, we got the second look at Q3 GDP. So there's 3 looks at GDP. This was the second look. It said that GDP was up 5.2%. If you just look at it on the surface, it seems like that's very robust, and GDP was increasing higher than it should. But if you really look at it, it's primarily government spending that drove GDP to be up that high. If you look at the consumer side, there's a lot of declines on the consumer side. So the GDP report wasn't as rosy as it looked to be on the surface. Then Thursday this week, we got PCE. So PCE is the personal consumption expenditure. It's the Federal Reserve's favorite gauge of inflation. As inspected, we saw this come down. So the headline number moved from 3.4% down to 3.3%, which is really good to see. And the core number, which is really what the Federal Reserve is watching, the core number strips out volatile items such as food and energy costs. This moved from 3.7% down to 3.5%. You know, it wasn't long ago where that inflation rate was at around 6.7%. So to see it come down from 6.7% to 3.5%, it shows that what the Federal Reserve's done and their restrictive monetary policy is working, which is also why they're all keeping a close eye on this. Then we got pending home sales. This is for the month of October. Again, pending home sales were down. This is resale properties, signed contracts in the month of October, down 1.5%. Again, not surprised, because mortgage rates pushed almost 8% in October. Even though we've seen them come down, I'm just not surprised that we saw a decline in pending home sales there. Not a lot to talk about today, but you do have Jerome Powell talking twice today. He had his first speech earlier, and it's interesting, you know, Jerome Powell is definitely not going to just come out and say, you know, we're happy with what we've done. We've seen inflation move to a level, and we're going to start cutting rates. Right now, they're just going to be kind of tempered in their comments. If they're overly optimistic in their comments, and the markets are going to just rally like crazy, and they don't want that to happen. So they're going to probably hold their cards close, be a little bit reserved. But you're starting to see more and more Fed members now, like Chris Waller we mentioned a minute ago, you know, kind of vocally saying that they're just confident in what they're seeing. And that's really going to lead towards rate cuts in the beginning of next year. If you're a home buyer and you're waiting for rates to go down, next year is going to happen. But I'm telling you, it's going to be crazy. If you're thinking about buying a house, I'd be looking at it now. You're going to have an opportunity to refinance. If you wait for rates to move lower, many buyers are going to be hopping into the game, and now you have a battle to deal with. Just saying, something to think about. I'm around all weekend. If you have any questions, give me a call. Happy Friday. Have a great day. Talk with you soon.